Hello everyone, welcome to another video. So the much anticipated decision from RBI, the RBI's Monetary Policy Committee, MPC, is finally out, and I hope all of you are aware of it. So we have seen that inflation concerns are there and GDP concern is also there. You have seen GDP slowing and it was less than expected. So all eyes were on this announcement, and in fact, many were actually expecting that there can be a possible rate cut. So if you look at the previous video that I have done in the morning pre-market analysis, I have discussed there is a possibility that the rate cut will be there. So the thing is that it is already factored in because there are discussions which is about the rate cut. So the discussions was there and that's already factored in. That's the reason why you have seen that rally on Bank Nifty yesterday. But I have also mentioned that if there is a possibility that if it is remaining unchanged, then it can counter act also. So that's exactly what happened. Nothing much, and it is just moving sideways. So that's about the market. See, the repo remains unchanged. That's the decision. But again, there is a significant move here that I want to discuss. It is by cutting the cash reserve ratio 50 basis point. So let's try to understand, why this decision has been taken and how it is going to affect the economy, the banks, and also the ordinary borrowers. See, the Monetary Policy Committee have decided to keep the repo rate unchanged, and it's 6.5 for the 11th consecutive time. So for the last 11 Monetary Policy Committee, there is no change and it's kept unchanged. And this decision comes despite a pressure from various quarters, including the government ministers, to reduce the repo rate to increase the growth, GDP growth, right? So I've already discussed that the growth has slowed down. In fact, it is lesser than the forecast, so which is a worrying sign. So it was expected that the rate cut will be there at least this time. That also not happened. But see, with the rising food inflation, again pushing the consumer price index also higher than the earlier estimate. So now it is at 4.8%. So RBI opted for caution because for RBI, what is a priority? Priority is price stability, that is inflation. So inflation is also now there and growth is also slowing down. So if you need to control inflation, you need to increase the rate or at least maintain the rate. If you need to increase the growth, reduce the rate. So it is like contradictory, right? So when inflation is there, at the same time growth is also slowed down. It is a dilemma. That's the monetary policy dilemma. So here RBI decided not to change the rate, so that the priority is very clear, that is inflation. But here the repo rate in fact can increase the borrowing and spending. So if you lower, that can again increase the inflation risk. That's why this approach of caution. Now let's look at the CRR cut. So it's a significant move that RBI reduced the CRR, the cash reserve ratio, from 4.5% to 4%. So what is CRR? CRR is the reserve, cash reserve that any banks have to keep with RBI, certain percentage of their deposit. That is the 4% now. So 4% of their deposit, they need to keep it with RBI. That's the cash reserve, okay, as a reserve. And this step, just because of this 0.5% reduction, that itself inject an estimate of 1.16 lakh crore into the banking system, which will again enhance in liquidity. That is also positive. So market was expecting rate cut, and that's already factored in yesterday. So now, since rate cut is not there, it would have counteract and the market would have been fallen, but this actually kept the market normal. So because though rate cut is not there, CRR in fact is going to bring that liquidity. So how it is going to happen? By freeing up more fund for lending, right? Because earlier banks have to keep 4.5 with Reserve Bank. Now banks have to keep 4. That means 1.16 lakh crore extra you can lend. That will add to liquidity. So banks can extend more credit. So what is the profit of the bank? It is the interest. So more the credit, more the profit, so the banks will profit, right? So banks profitability will increase. That's why you see bank shares will go up. So that will potentially boost economic activities also. Okay. Now, this move actually aimed at addressing the liquidity crunch, which is caused by RBI's interventions in stabilizing the rupee, which in fact recently touched the record low against the US dollar. That also we have discussed before. Now let's look at the impact on banks and the borrowers. See, for banks, the CRR cut is very much positive. Than anything, CRR cut is very positive for banks because they have more money to lend. Earlier, they need to keep 4.5 percentage as cash reserve. So now they can lend that 0.5 percentage also. The more lending, the more profit, the more interest. The bank's profit is mainly interest. Okay, so the more they can lend, the better it is for them. So previously, if you see, banks have to keep higher proportion of deposits as the reserve without earning interest on that. But now, since it is reduced, the CRR is reduced, banks can lend more and can get more interest, thereby improve the profit and the profitability. But for borrowers, the unchanged repo rate means there won't be immediate relief on loan EMIs or for homes or car loans, because this interest and everything is connected with repo. So everyone was expecting that repo will be lowered. In that case, EMIs also will lower, right? Because the repo is lowered and all the interest rates are connected with that. So interest rate will come down. At the same time, depositors may see a reduction in interest rate on savings account and fixed deposit as banks adjust to increase liquidity. So when banks have more liquidity, then what they will do, they'll try to reduce the interest rate. So let's look at the GDP related aspect. See, RBI revised the GDP growth estimate for fiscal year 2024-25 downward from 7.2 to 6.6%. So this adjustment actually reflects slower than expected growth in the second quarter, 5.4 percentage, with inflation and global economic challenges being key contributors for this. But RBI remains optimistic about the recovery in the third and the fourth quarters, driven by festive demand and improved rural consumptions. Okay, let's also talk about the inflation worries and the global factors. Inflation remains a primary concern for RBI. I told it before also, in the price stability is the major concern. If RBI have to take one between growth and inflation, though it's RBI's role is to manage the growth and inflation, but the priority is always for price stability and inflation. So despite the global trends, such as the US Fed Reserve reducing the interest rate, RBI chose not to follow the same and prioritizing domestic economic stability. So the central bank also emphasized that food inflation and the external factors like volatile oil prices require careful monitoring. Now, why liquidity is critical? See, the liquidity issue in the economy stems partly from RBI's efforts to stabilize the rupee. So, by selling dollars and purchasing rupee to support the currency, liquidity in the system have tightened. See, why rupee is depreciating? Because demand for dollar is high. So what RBI will do, RBI will sell dollar. When RBI sell dollar, what will happen? The demand for, so more supply of dollar will come, so rupee will appreciate. So because of that, what happened? The issue happened, there is a liquidity crunch. So what RBI did is RBI was selling the dollar, so more supply of dollar was created that affected the liquidity of rupee. So the CRR cut basically aimed to counterbalance this by pumping cash back into the economy. So that will ensure the business and also consumers have access to credit at the same time. So if you look ahead, the RBI projects GDP growth for quarter three at around 6.8 percentage. And for quarter four, it's around 7.2 percentage, driven by festive season demand and rural recovery. Rural economy will recover, but much will depend on how global economic conditions and the domestic inflation trends unfold in the coming quarters. So the February 2025 monetary policy committee meeting will be very crucial in determining whether repo rate changes are on the horizon or not. So guys, the RBI's decision actually reflect a delicate balance, or in fact, it's a very balancing act between supporting growth and controlling inflation. How it is controlling inflation? Because repo rate remain unchanged. How it is supporting growth? By reducing CRR, it is injecting that liquidity which is required. So the unchanged repo rate signals caution on one side. The CRR cut aims to address immediate liquidity concerns and also it will boost economic activities. So what do you think about these measures? Should RBI have gone more aggressive in cutting interest rate, or is this cautious approach is the right one? Don't forget to share your thoughts in the comments. So okay, so that's about this session. Thank you so much for watching. In case if you're looking for mentorship, I've given the details and the links in the description. You can consider joining there. So see you guys. Thank you so much.